We're talking about self-employed buyers.
Self-employed buyers or borrowers, there's nothing wrong with being self-employed. Typically, you start running into issues is that they're freshly self-employed, they've only been in business for less than a year. That's going to be tough to overcome. But if you've been employed for 2 years or more, there's a few different loan programs. Typically, we could just treat you like any other normal program if your tax returns show the income that you make and it's a positive amount. It's just like any other loan. There's going to be a few extra documents here or there to prove your ownership and how much you make. But overall, it's a pretty seamless, normal transaction.
But you do need 2 years worth of W-2s.
Or Schedule Cs, or however you pay yourself self-employed. There's a million different
So you need to be
self-employed
self-employed consistently for 2 years.
Yes, in most cases, that is the answer, yes. Let's say you've been self-employed for 10 years, but maybe your tax returns are just not the prettiest. There's a lot of write-offs for whatever reason, and your income is just a lot less than what maybe your actual income would be without the write-off. There are called non-QM products, basically specialty products to where instead of using your tax return or W-2s or whatever way you pay yourself, we could just use your bank statements, 12 months of your business bank statements. And what we typically do to keep it just simple is we're going to go through all 12 months of deposits on your account and then divide that by a certain percentage, and that is the income we could use to qualify. Okay. It's pretty simple. There's really not too many overlays or extra rules to get around.
That's pretty cool. And that is probably geared for someone who hasn't had consistent income throughout being self-employed,
or they just have a really good accountant. You know, sometimes accountants get creative and there's a lot of write-offs buying cars, and maybe this person makes $100,000 a year, but after a write-off, it's $10,000 a year. Okay. But basically, just because you're self-employed and maybe your tax returns don't look the best right now, that doesn't mean you can't buy a house. Also, worst case scenario, let's just say maybe they can't buy a house right this second. I could look at what their current tax returns look like and give them, hey, for the house that you're wanting to buy, for the payment you want to afford, you need to make this sum of money roughly. And that's up to them and their accountant of how they want to work that out. Then they know where to go from there.
So if you're self-employed, you've got options too.